What's good, guys? You're here with the very, very mentally tired crypto mug investors today because,
In a good way,
yeah,
guys.
in
He
a
makes
good
it
way.
sound bad. Put it
In
this
the best
way.
way, the best way.
You are going to leave this interview a wiser person than you were before. And you know what I'm going to do later, guys? I'm going to watch this back before it even goes live. I'm going to take notes, and there's lots of research I want to do. Simon is, guys, he's had his finger on the pulse for 20 years. You need to really watch this, and you need to go and follow him online, guys. Check him out.
Yeah, he's been in the space since day one, guys, near enough, and he's just I can't even put it into words. His thought process on what's going on in the economy right now, how the governments and central banks are going to react, the way things could be looking for us all in a few years' time, and more importantly than not, where Bitcoin plays into this. He is an absolute Bitcoin bull. When you hear him lay it all out, the potential theories and the way things could play out, you're going to just wish you had a hell of a lot more Bitcoin. That's all I can say. If you're watching on YouTube, make sure you bang the like. It's free. It doesn't cost you anything, and it really helps us out, helps us get our message far.
Let's give him a chance. Guys, you've got 3 seconds. Bang the like. 3, 2, 1. Lovely. Thank you. Roll the music.
Peace, guys.
Brilliant. Well, thank you so much for coming on. We are very, very pleased to have you here to give us Moon Boys some advice about the economy.
Yeah, I've been a big fan of yours for a long time, actually, Simon, and I've enjoyed watching your YouTube videos. Your insight to the economy and cryptocurrencies is just awesome. So that's why we really wanted to get you on so we can share that with our audience. So maybe the best place for us to start is if you wouldn't mind giving us a bit of your background on how you got into economics and how that led you to Bitcoin.
Yeah, sure. So I guess for me, 2020 is actually my 20th year on what I consider this journey. So the journey started for me when I went to university, studied economics, did a master's in economics, and then embarked on a career in investment banking. So I started as a stockbroker at a company called TD Waterhouse. Then I worked as a market maker for an investment bank called KBC Peel Hunt. Then worked in corporate finance. And decided to quit in 2006 because I wanted to actually spend time on an obsession of mine, which was studying money. I found that a lot of economic theories were really conflicting, particularly in economics, around the effect of money creation and how money is created on economic models. So it was pretty geeky. But I went around about 100 different universities in the UK presenting on how the way money was created was going to lead to the collapse of the banking system. And then I wrote a book called Bank to the Future, Protect Your Future Before Governments Go Bust. It was that and being a part of a community called the Monetary Reform Community that actually a gentleman messaged me on Facebook called Johnny Bitcoin, who just sold all of his everything he owns to move into a squat in Old Street with some early Bitcoin developers. Wow. And he sold his house and actually moved into that squat. And so that really intrigued me. He was part of the monetary reform community. And intrigued me so much that I decided to include it in the book that I was about to publish. And Bank to the Future became the first published book in the world that included Bitcoin. I then decided to launch it at the very first Bitcoin conference in the world. So I spoke, we flew over to Prague, and during that week, the price of Bitcoin crashed from $30 to $3. But we were trying to actually launch a version of a bank that could work outside the financial system. And so when myself and my wife, the co-founders of a company called banktothefuture.com, we were trying to build what we call a non-fractional reserve bank, wow, which was a very challenging concept at the time, and it couldn't be done. And so when we discovered Bitcoin, it wasn't actually from a making money perspective. It was actually a technical solution to a problem that we were trying to solve. And so we invested in it early because we were trying to solve that problem of how to build a bank outside the banking system. And really then we pivoted Bank to the Future. We didn't end up building a bank. We built an investment platform because we had an investment thesis that this was going to disrupt many aspects of finance, and technology was going to be used to disrupt every financial product. There was inherent systemic risk in the financial system. And I guess that's when I published a video in 2010 called The Great Depression of the 2020s. And it went through all the trends that have really, I didn't think it would be as accurate as it is, but it went through the trends that have led us to where we are today. So over the years, I'm an investor in over 100 different companies in the industry, from BitPay to Coinbase to Kraken to Bitstamp, wow, Bitfinex, everything in between. We've just been supporting the growth of the industry. And more recently, I've gone, I started publishing on YouTube around about 2010, and had that first Bitcoin conference talk. And more recently, and over the years, I've just been giving commentary on what I see, how this technology is going to be used in order to, get out of the systemic risk events in the financial system, and also give people the opportunity to exit the system through Bitcoin. So really, that's my 20 years life work in a summary that brings us to today.
And do you see that all playing out very much now with what the coronavirus has done, essentially bringing the economy to its knees? We're seeing cracks appearing absolutely everywhere. Do you think now's the time for Bitcoin to shine and to start, fulfilling what we've been hoping it can do for a long time?
Well, so what I always talked about was there's three concepts that Bitcoin does that traditional banks can't do. And that is that when you deposit your money with a bank, the bank becomes the legal owner of your money. So when we found Bitcoin, we saw a form of money where you can actually own it yourself, rather than having to give it to a counterparty and then them own that money. And in times of that institution, like a bank, having financial pressure, they can actually bail in and keep your money. So that was the first thing. The second thing is that at a bank, when the bank becomes the legal owner of your money, they can spend it as they choose. So what tends to happen is they redirect the leverage and collateral of your funds to the financial markets that they think is most profitable. And therefore, it creates artificial bubbles. So an example is 40% of all bank deposits are used by banks in order to actually issue mortgage loans. Therefore, it creates an artificial price increase in the real estate and property markets, where eventually it reaches the phase where people's income are lower than their mortgages. And therefore, you have this rich-poor divide where through the mortgage markets, money is sucked out into the top 1%. That's one example. There are others like derivatives and other financial markets, and more complex exotic products like mortgage-backed securities and all sorts of stuff. But the point of the matter is that because they become the legal owner of your money is then used to do a bunch of things that the bank thinks is the lowest risk and most profitable. And if you're lucky, they will give you access to your money as long as they agree that you're spending it as they want you to spend it. Now, if you have less than £10,000, dollars, euros, you don't really see too much of an impact. But if you've got more than that, you start to reach the phase where you're lucky if the bank will let you spend your money the way you choose. For example, if you sent it over to a cryptocurrency exchange because you wanted to purchase Bitcoin, then you could end up in a scenario where the bank won't let you spend your money as you would like to.
Yeah.
If you want to send it to a cause in a country that is, against a certain government's agenda, because for political reasons, then you are unable to send that money as you choose. So if you want to convert it into cash in times of political uncertainty, like the people did in Greece, then they can shut down ATMs and you can't actually spend that money as you choose. So you don't necessarily feel it all the time, but there are moments in your life, especially as you build wealth, when you actually start to realize that your money is not your own money, and you have to beg for the bank for the ability to spend your money if they disagree. And so with Bitcoin, it created this peer-to-peer electronic cash system where you can own your own money and then send it globally wherever you choose. And, law enforcement is not enforced in the protocol, it's enforced by law enforcers. So if you do illegal things with your Bitcoins, then there is a legal system to prevent you doing those things, but you can actually send it without censorship. The third and final thing is the monetary policy, which is a really crucial part of this. So what we're seeing right now is the excessive, through the process of debt creation, through various institutions like the central bank or the retail bank, increasing the supply of money backed by debt that exists. So all digital money in our system, if you log into your online banking right now, if you have a positive balance, that money was created as somebody else's debt. So it means that for every positive deposit in the banking system, it's a negative balance for somebody else, because the way money is created is it's created as debt every time a bank issues a loan. So you end up with this quasi Ponzi scheme like scenario, where in order for the government to grow an economy, they need more money. In order to have more money, you need to have more debt. But if you want to decrease the level of indebtedness, then you have to actually decrease the money supply, which leads to a recession and depression and a boom-bust business cycle. So, the way that money is created in the traditional banking system is a complete Ponzi scheme. And they invented a digital currency called the digital pound, the digital euro, the digital dollar, which actually is in fact a representation of the government's currency. It's not actually, so they invented digital currency. With Bitcoin, it did the exact opposite. It said, here's a fixed money supply, and we will reward people that verify all the transactions, or computers, and we have a set algorithm that's based upon maths and code that can never change, and you enter, and there's only ever going to be 21 million of them. So you have these two-tiered economies. Sorry if this is a bit long, but
no, I'm enjoying it.
Up soon. You have these two-tiered economies. You have the complete opposite. You have this money that the bank owns that they can spend for you, and the supply of it ever increases, diluting your value in the future.
Yeah.
And you have Bitcoin, which is the polar opposite. You have money you can own, money you can spend, but a fixed money supply. Now, those two forms of money are better. They have pros and cons. Bitcoin, a fixed money supply is very problematic for running an entire economy, because you end up with radical price fluctuations relative to if your mortgage or your rent is priced in pounds, euros, or dollars, and you're earning Bitcoin, then you may or may not be able to afford that rent because of the radical price fluctuations. So fiat money becomes a better way of doing, day-to-day expenses. But crypto, from my perspective, if this investment theory plays out, will be the best place in the world for your savings. But it also happens to be savings that you can spend globally and own. So we just have today this incredibly interesting social experiment where, because of bringing it back to the original question, and sorry it was so long, but bringing it back to the original question where you talked about the health crisis that we're experiencing right now. Well, the health crisis is the end of a cycle of debt cycles. And what we're at right now is a scenario, a black swan event, a systemic risk event that could have been a student loan crisis, could have been a credit card crisis, could have been one of a pension crisis, could have been one of many events, because we're in this Ponzi scheme where debt has to increase forever. This just happened to be an event which we haven't seen, since whatever the last one was, 1918, on a global scale, that wiped out 50 million people. The event that we see right now with this health crisis puts the government in a situation where they have no alternative but to chuck the entire monetary system at it. And I don't know another way of solving this problem other than the excessive, creating trillions and trillions and trillions through financial innovation, which is what they're doing. But at the other side of this, it has to be matched with radical monetary reform. And my work, and when I publish my videos on YouTube, I talk about what I think that system will look like, and so that you can start to prepare, and you can also hedge your risks and start to think about, what if this scenario happens? What does that mean for my personal wealth? Well, if this scenario happens, what does that mean? And people can start to plan and prepare. It's kind of where I'm at the moment in terms of my journey.
So you have some interesting thoughts as well on debt deflation and where the potential of a new central bank digital currency could come into that as well, which I thought was, just fascinating. How do you see that playing out?
Yeah, so I created a video called Real Estate Market Crash and the 10 Next Steps, and I think that's what you're referring to. Mm-hmm. And what that refers to is that governments right now are essentially chucking the entire monetary system at solving this health crisis. After that, you need radical monetary reform or banking reform in order to solve the problem. I believe that because we're in an environment where they've chucked every bullet they have, they've chucked interest rates, they've now not got the interest rates at all, they're zero. They've chucked fiscal policy where the government is in a level of indebtedness where soon the income that they earn from tax may not even cover the interest on their debt in a country. And that is a classic Ponzi scheme, because where you either move to something that looks more like socialism than communism in order to do 100% tax in order to cover your debt, or you have to you accept that we're going to repay this, and therefore we need to use financial innovation to solve this problem. And that is what they've done over the years. So the last financial crisis, they did a few things. They did quantitative easing, and that was the process of the central bank creating new money and borrowing it from large corporations through the bond markets, through corporate bonds. And the reason that they did that is because they wanted to stimulate the stock market. So the reason today is unprecedented is because we've never in our 200 years of history in the stock markets had an environment where the government refuses to let the stock market crash. And that's what we've been doing for the last 10 years. What they did is the central bank would create new money. It's just a digital entry on their computer. And they would use that money to buy up corporate bonds. The companies, the large corporations that were creditworthy would then take that money and buy back their stocks in order to support the stock price. Yeah. We see this in crypto world all the time, and we call it, market manipulation. Well, that's how the stock markets work. They also did another thing. They created a lot of money, and they essentially bought government bonds. So the government decided to borrow that money. And when the government borrowed that money, they decided that banks are too big to fail. So they gave it to all the banks, and then they obviously paid their bonuses. They chucked all the toxic assets over and restructured the toxic assets. And then they recycled the financial system into another 10, 12 years. So that we reached the stage where we're at today, where we had in 2008 a problem where there was too much debt from both consumers, corporations, and governments. And so we solved it by giving them 10 times the debt that they had when they had the problem. And now we have a health crisis where traditional Keynesian economics says that you should you save in good times and you spend in bad times. But what the government did is they took Keynesian economics and they essentially took on debt during the bad times and then continued to take on the debt during the good times, breaking the theory of Keynesian economics. I'm not a Keynesian economist, but they're not following Keynesian economics. They're just increasing the debt in the debt cycle. And that's because it's all systemic. So what I think that they're going to do next, now the fiscal policy is gone. Sorry, that's the fiscal policy is the process of how they spend the government's debt and tax. Monetary policy is no longer effective. They've chucked all this money at it, and yet their tool for manipulating interest rates so that people borrow and actually take on more debt is no longer working because everyone's bankrupt. 99% are living month to month, and 1 month of no income is financial disaster for them. So then the government is then having to spend all of their money at supporting the world's income, because everyone's at the end of this debt cycle. And I think what they're going to do next is they're actually going to replace debt-based money with debt-free money. This is a reform that I talked about in my book, Bank to the Future, that I was saying is going to happen. And essentially, it's a form of, it's a way of taking all the debt that people owe at a bank, allowing a bank to go bust, but people not losing their money. And the way that would look is essentially you create a digital pound, a digital dollar, a digital euro. Mm-hmm. And when a bank goes bust, you swap people's money, debt-based money for debt money. And what that looks like is, imagine you had $10,000 at a bank that just went, that is under financial burden or financial pressure. Then if the bank goes bust, you lose your $10,000. So Bitcoiners are thinking, yeah, let's kill fiat so that Bitcoin succeeds. Well, that's a very undesirable outcome. Yeah. That's your grandma, that's your mother, and that's most of the world bankrupt and in a very, very undesirable world, which would lead to a world you don't want to live in. It's why they didn't let the banks go bust during the last crisis. Yeah. You swap that, essentially, you create a digital currency whose supply is proportionate to the supply of the bank going bust. So if you think about it, I had $10,000 at a bank. I download the digital app created by the central bank, and my $10,000 is in there. The bank goes bust, the debt-free money disappears, and it's replaced by a new debt. The debt-based money disappears, and it's replaced by a new form of debt-free money that's created by the central bank. And the reason that is non-inflationary is because you're destroying one form of money and creating a new form of money, and so the supply doesn't actually increase. Yes. But you're removing all of the debt from that. Obviously, the debt that was there can be auctioned off, and it will be, as it was during the 2008 crisis with the toxic asset auctions. But the problem is that this causes and creates a system whereby the central bank owns all the assets and everybody's money.
They're just going to have every problem on their balance sheets.
Exactly.
Yeah.
So but do you see a reset like this happening? Is this something you feel confident is happening right now when we see the digital yuan at the moment?
That's exactly what I'm seeing happening. So in 2006, I created a video on how China would be the first country to do this when they started creating their digital currency in 2006. The reason that they would be the first country to do it is because China is the greatest growth story that we've seen in the last few decades. Mm-hmm. They grew their economy on globalization and capitalism with an internal philosophy of communism. And that created the largest growth story we've ever seen. The government controls everything within the borders, but they benefit from all of the world's, by exporting everything to the world. When they export everything to the world, they get injections of debt-free money, which essentially were dollars. So America was consuming all of China's goods. They were buying it with dollars. China was accumulating masses and masses and masses of dollars debt-free. The debt remained in the US, but the Chinese economy ended up with this massive savings of dollars. They then used those to invest in America through treasuries so that they could receive a return on their dollars. And you created this economy whereby China was exporting all the goods, devaluing its currency so that things were cheaper and cheaper in China. The dollar was getting stronger and stronger and stronger. China was benefiting from globalization and capitalism outside its borders and complete control inside its borders through the Chinese Communist Party, which created the largest growth story that we've seen, devaluation of the yuan, and strengthening of the dollar, but record levels of indebtedness, backed by the largest financial market in the world and the world reserve currency, the dollar, which is used to price oil, gold, and therefore they can take excessive money printing without actually destroying the economy. I totally see that we can end up with a digital dollar, a digital euro, a digital pound, and a system whereby central banks essentially take down and take on the retail banks, allow them to go out of business, and they release technology and API keys whereby fintech and financial technology companies can all build their own versions of financial technology banks on a money supply that's not backed upon debt. And this is how you de-leverage the entire economy.
What I'd love to know is, are you seeing this as net positive? Is this a positive change towards CBDCs, or is this something happening that we need to fight against with permissionless blockchains?
I see it as something that there's no point necessarily fighting against. What I think that you need to do is you need to understand that we're moving towards a two-tiered economy. And then you need to prepare personally for how you want to sit within that economy. So I believe that the systemic risk of our system is inevitable, predictable, and guaranteed to move towards this scenario. And I don't think there's a lot that anyone can do in order to change that because of the system. And it's probably one of the best outcomes that we could actually achieve given the scenarios that we're in right now. But what does that mean? It means you need to be aware of what money does what and what it means to you. So what this means to you as an individual is that if the central bank pretty much owns the world's assets and is the banker to the world, and financial technology companies are sitting on top of the central bank providing financial services in a more competitive market, you will actually get much, much better services because it will be a much more competitive market than what we have right now of a few banks that have clearing and a monopoly and crazy system. There will be some other changes as well. The system will not need to drive people into debt to exist. That does not mean that debt is a very useful tool. I'm not anti-debt, but money created as debt is a Ponzi scheme. So the economy will not need debt to create new money, which means that you don't have the systemic risk of debt. But what will that money do? So you've taken out certain risks and you've created new risks. The new risk you have created is that you have money in the same hands of the institutions that implement the laws. And what that does is it means that you end up, and tax collection, because although central banks may be independent from government, some aren't, some are, every country is slightly different. But they have a manifesto between them. Mm-hmm. Central bank digital currency will be used as a tool by governments around the world to track every single thing that you do. And if they don't like what you're doing, they will just simply connect it to your digital passport and switch it off. And if they see that you're contributing to something that they don't think is in line with the way that they want you to spend their money, then at least before, the bank made your money one step removed from this type of institution. It also means that when you're trying to implement policies like how do you get over this health crisis? Well, it's quite clear to me that policies that are going to be implemented is that you're going to need to prove that you don't have this virus in order to function and move into a non-lockdown economy. So eventually there's going to be some kind of vaccine. And if you don't have that vaccine, then your passport's not going to work.
This is quite a scary world you're describing.
It's also going to be, if you are in a global transaction, you are on a Zoom call doing a transaction. The Zoom call is hosted on the US government servers. You are in one country and the other person is in another country, and you pay with that central bank digital currency, or the US government, in trying to balance its books, is going to claim that that transaction happened in the US. The person in the UK is going to say that this transaction happened in the UK, and the person in China is going to say that that transaction happened in China. All three of those governments are going to have algorithms to automate tax collection. And if you don't pay all three of them the tax that they think that you need to pay them, then your passport will be switched off and it will automate the tax collection, and use these, and there's going to be problems in those algorithms that they're going to create in a world where everybody's in global currency wars, trying to balance their books through tax collection. So these central bank digital currencies are going to be the biggest attack on freedom and privacy you've ever seen, but they will be a highly efficient, non-debt-based money.
To get us out of the mess we're currently in.
It takes out the fiat, the debt-based Ponzi scheme. It takes out, the monopolistic banking cartel that we have right now, and opens it up to all competition and all fintech companies to produce much, much better and more competitive financial services. But it takes away all your freedoms, privacy, and control. So then you've got to look at, well, what does Bitcoin do? Well, Bitcoin is a system that was designed in order to give you control of your funds, you the freedom to send it globally, and a money supply that cannot change and is absence of politics. My personal belief is that the demand for money that you can own, that you can spend, and cannot be changed in monetary policy is going to increase more and more over time. And because the supply can't increase, the only way to get that is to pay more for it. So I think you're going to have this money that is very competitive and good in the fiat world. You need the two-tiered economy, but it's going to be real problems for your freedom, privacy, and savings. And then you're just going to have this exit from the traditional financial system. Now, gold has traditionally played that role, and gold will continue to play that role, I believe. Gold is a store of value. Bitcoin is what I call a speculative store of value. And by speculative, it means that the concept of a store of value is that you preserve your wealth. And gold has been very good at preserving your wealth. You're not trying to make money from gold. You're trying to preserve your wealth. That's how the rich have used it. Bitcoin is a speculative store of value, meaning that at the moment, the majority of the world think it's a scam, a Ponzi scheme, or a currency just for drug dealers, or a get-rich-quick scheme. As long as the majority of the world who have now all heard of Bitcoin, when we first started, it was 20 to 40 people in a room, and something that we never imagined the whole world would find out about. But today, almost the entire world has heard of Bitcoin, but they've got an incorrect perception of what it is. What that means is the day that Bitcoin becomes a store of value like gold is the day that it reaches the reputation of gold, where it's not a Ponzi scheme from most people's perception. It's not a currency just for drug dealers, because essentially it's a really bad way of having a permanent record of your crime on a blockchain. It's not a Ponzi scheme like traditional fiat, and it's not just a get-rich-quick scheme. That's why I call it a speculative store of value, because those that realize that sooner get to benefit from all the upside. As I forecast, the world will eventually realize it, just like they do for gold. And therefore it creates exponential returns, as it has from its history, where in its first 10 years, it produced 9 million% returns for people, because those in the beginning that believed in it, as more and more people get on board and start to realize that it's not those things, the only way that they can get it in a fixed supply is by actually paying a higher price for it.
Wow. So, I mean, the idea of this, it's as if banking is going to get even more centralized than it already is, putting all of that power in the hands of a central bank. That's quite a frightening scenario. But at the same time, I could see how that would be extreme rocket fuel for something like Bitcoin and possibly other cryptocurrencies, because people are going to be really drawn to something that's going to give them back those freedoms. And no one can stop Bitcoin. They can't shut it down. And in fact, we're seeing it being embraced. I mean, here's a good question. I mean, if we are to see the central banks play out this way, do you think they would take a stricter stance on Bitcoin in a world where they are trying to have more power over the people and censor what we can and can't do? Do you reckon that at that stage we could then see them perhaps take a much sterner stance against Bitcoin and perhaps bring out laws to stop people from using it?
Yeah, absolutely. And we've already seen that. So I was in China, in Shanghai, the day that China announced that the exchanges are now illegal and they can't operate. In India, the central bank said that banks are not allowed to serve Bitcoin exchanges. We've seen in countries that have hyperinflation, the effects of, making, punishing or sending people to prison for using it. So we've seen all these use cases. And it's always been something that, we've been wrestling with in the community. But the reason that I don't think that that's going to play out is because of the laws of competition. And so what I think will happen is, let's say, who's the country that's got the most to lose from radical currency reform? America. Well, it's the currency that's in control right now, which is the US dollar. While the US dollar is still the world reserve currency, it's going to become stronger and stronger and stronger from my perspective, not financial advice. But if you're holding fiat currencies, the place that I hold my fiat currency is in the dollar, because as long as the system exists, currencies like the yuan will always be devalued because of the import-export relationship I told about earlier. So when the yuan tries to create a digital currency as a currency war to try and take over the dollar, people know that the Communist Party are always going to devalue that currency, so therefore it's not going to be a good store of value, and therefore it will, in my perspective, fail in that mission. That's why they're now looking at a gold-backed currency, because they've been accumulating gold, the most amount of gold in the world at the People's Bank of China, and they're looking at a gold-backed digital currency, plus their own, remember China's strategy, internal communism, global capitalism. That's the strategy that created the biggest growth story for decades and decades. They're going to do the same at the currency level, I believe. We're entering a phase of global currency wars. So the US dollar has the most to lose. But when I'm speaking to, for example, I live in the Isle of Man, they have the Manx pound. And when the governments are coming to me right now, because they've had to actually put aside £100 million in order to actually sustain an economy, and they have a manifesto that it's illegal to take on debt. They've always balanced their books. It's one of the only countries in the world that's tried to balance their books. But this, this systemic risk event means that they could chew through all their savings and be in a very tricky situation. Well, the Isle of Man was the very first government in the world to actually support the Bitcoin community. So I spoke at their conference in 2014, which was the first government-funded Bitcoin conference in the world. And they said that they're going to allow for tax collection in Bitcoin. I'm not sure how many people want to pay their tax in Bitcoin, but it's still a very interesting concept. It's like a double whammy. You lose your Bitcoin and you pay your tax. But anyway, and they wanted to create an environment whereby all the exchanges could relocate here, and they could create a regulatory structure that gave them access to a banking system which could support the growth of the Bitcoin community under an environment of regulations that could support consumers. Immediately, the Bank of England contacted them, because they have the Manx pound, which is pegged to the British pound, and told them that if you do this, we're going to remove clearing to your banking system. So we're seeing this in countries like Europe. Sorry, I'm covering a lot of different topics.
No, it's amazing. Keep going.
Brexit is just such an interesting concept, because the UK was the only country in Europe, one of the only countries in Europe, that had an independent central bank, its own currency, and all the benefits of European trade. There was really good parts of Europe, which was, global trade, removing tax agreements and freeing up markets within Europe. The bogey and the downside is that you have to give up your currency and give it and operate off the monetary policy of the European Central Bank. Britain had the best of both worlds, and they were the first to leave, which is why Brexit was such a crazy, unpredictable scenario. Britain literally had the best of both worlds, but I don't think the people that voted for it knew that. But anyway, I do think it will be a good thing, because, being under the control of the European Central Bank is dangerous right now. If I'm Italy and Spain, and the future of my country depends upon big Germany, i.e. the European Central Bank, that's not a nice place to be. In Isle of Man, they had a similar scenario, that the Bank of England could exercise unnecessary influence over their government's policy and the new industry that they wanted to support, but the banking system's too important to them, obviously. But the interesting, when you can, I think the whole point of this, and I've forgotten where I was actually going with the trail of thought, is that when you own your own central bank and your own currency, you get to use financial engineering. When you don't, you don't. This is why countries like India right now that are taking on World Bank loans, $5 billion World Bank loan. What does that what does that do for India? Well, what it does is it borrows money in dollars from the World Bank. The loan is tied to rebuilding their public health sector. The terms of the contract are going to mean that you're going to have to spend those dollars back in America, and therefore the debt essentially remains in dollars in India, but all of the money ends back in America, and America gets a boost to its economy through all the spending. And India is indebted in a foreign currency under the control of a foreign institution like the World Bank. Now, when you have it's one thing having, indebtedness in your own currency to your own central bank through quantitative easing. It's another thing being in debt in a foreign currency to a foreign institution. So India has signed away the death sentence essentially to the World Bank, and the World Bank will be restructuring all of these products as the level of indebtedness comes down, and then they're losing their sovereignty in their country through this. And where did the World Bank get the money in the first place? They created it. They didn't have those dollars. They created those dollars on a global scale. So this system has moved now where we are in a world where 70% of the world's currency is in dollars. And 70% of all of the central banks in the world have assets in gold, treasuries, dollars, and their local currency. So everyone has America has borrowed all the money globally, so we have to support the dollar. The consequences of treasury going down, and they've got access to all the financial engineering, which has made them the most successful economy, since the fall of the British Empire. And so, essentially, it's just these global currency wars are all going to play out. But I've completely forgotten what the original question is and where.
Oh, it's amazing. We've gained a lot of value. If I could ask you, and of course, I'm not asking for a price point at all.
Yeah.
But in your time in this marketplace, do you?
Oh, it was. I have remembered the question. It was about becoming illegal, right?
Yes.
I'll take your question. So hold that thought, and then So that's why I was talking about the Isle of Man, because I was talking about how small countries. So
yes.
if a country asked me, what should I do to become the next superpower? If they asked me that question, not many countries are asking me that question, but if they did, I would tell them, allocate a portion of your country's electricity to mining Bitcoin. And then at the central bank level, accumulate a position in Bitcoin. And then once you've accumulated enough Bitcoin, announce to the world that you're actually holding Bitcoin as part of your basket of reserve assets. I've got treasuries, I've got gold, I've got Bitcoin, and I've got my local currency in order to manage my own country.
Do you think that's already going on? Do you think there are central banks doing that right this second?
I am certain that that's happening right now, and they won't tell you until they're ready, till they've filled their bags. Then the small country will come along and make that announcement. And I created a video called How Bitcoin Could Become a World Reserve Currency by 2020. It was published before this crisis, so it got a lot of pushback, a lot of hopium claims, a lot of crazy, you're nuts. I mean, it was a crazy scenario. And what I said is that there would be a ginormous systemic risk event that exposes the Ponzi scheme of the financial system. That event will cause the system to be exposed. That will then have risk on the banking system, and we would enter a phase of global currency wars as we need to radically reform our monetary system, just like we did after the last World War in 1945 at Bretton Woods, and just like we did in 1971, where the dollar was negotiated to be the world reserve instead of gold. We're now entering that phase right now, and we have been here before. It's not new. History has told us how this story plays out. And so, yeah, then I think you enter into this game of chicken where the central banks that have got nothing to lose could say, well, my currency is hyperinflated away. I'm Venezuela. You know, we've killed our currency. It's, you know, through, you know, absolute corruption of power. But what if we wanted to do something slightly differently? Maybe some honest leader comes in. Maybe not. You know, I am a positive person at the end of the day. I like to think the cup's half full, but I prepare for the cup being half empty. And they, you know, they come along and say, well, we'll have a bet on Bitcoin. Then they announce it. The price of Bitcoin starts to go up. It becomes a self-fulfilling prophecy. Yeah. Other smaller central banks say, I'll have some of that. Then medium-sized central banks, like major economies like Japan, who have been implementing Bitcoin regulations for their exchanges, accepting Bitcoin as if it were almost a legal tender, building their, you know, and set up the infrastructure to be able to support a competing currency like Bitcoin. One of those major ones will come along and say, hey, because they've been mining Bitcoin, the largest banks in Japan have invested in Bitcoin mining. They've been mining for a long time. They own many of the Bank to the Future were investors in many companies, and some of the banks in Japan have been co-investing into those companies for a very long time. Japan is perfectly positioned to become the next superpower, and they've been doing it all behind the scenes. They could then come along and say, well, we'll have some of that. And therefore, the last people to actually put Bitcoin on their reserves is the ones that are playing the game of chicken, which are the ones that are most to lose. What's the largest currency? America, Europe, China. And so you could end up with what I believe personally, the largest wealth. This is why I consider Bitcoin a hugely risky, because it's very speculative. But in terms of risk reward, it's disproportionate to any other asset class in the world, because the reward of this happening in my crazy blue sky thinking, and I've come up with crazier things that did happen, you could end up with this competing global redistribution of wealth. And then these fiat-based currencies, what are they doing? They're doing helicopter money. They're increasing their supply. They're making everyone, you know, helicopter money in every country is going to be implemented by saying, download the digital wallet. There's going to be new money created at a central bank. You have to download it. The only way to get that money is to prove that you have taken the test or the vaccine. Therefore, you get that money. The money, you're in the central banking system. Everyone in the population, they could get mass downloads by incentivizing them with helicopter money. You opt into tracking, you opt into privacy, removals, you opt into removing every freedom that you have. And why do you do that? Because you're currently in a situation where you want some free helicopter money, and the vast majority of the world, of course, will take that. And there you are. You're in a central bank digital currency world. It's step by step.
How long can that sustain itself as well, though? Because if they replace all of the debt-based dollars with the central bank digital currency, that still doesn't change the fact that they're going to still have to keep chucking money at everything. You know, I mean, if we end up in such a mess where all the retail banks really are allowed to disappear, the whole system changes, becomes more centralized with the central bank. I mean, what's that going to mean for property prices and the economy moving forward, the stock market? You know, how are they going to keep propping that up? I mean, I don't know. All these questions are flooding to my mind.
Well, yeah, the one thing I can give you theories on what I think they'll do, but whether they will do it or not is politics, and I'm not a politician. Mm-hmm. I just try and think a few moves ahead and where I want to position my savings. The money supply is a lot. So at the moment, what do central banks in order to control inflation and deflation? Well, what they do is they essentially say, in times of deflation, where asset prices are going down, we need more people to borrow. So what do? We put the interest rates down so that consumers can borrow, businesses can borrow, and governments can borrow. And therefore, that new debt inflates the economy again, and then eventually this bogey called inflation comes along and prices start to get more expensive, so you have to cool down the economy. How do they do that now? Well, they then put the interest rates up. Yeah. So what are they doing? They're taking the people that save the economy by borrowing it and making it unaffordable for them to repay their loan, so that you send them bankrupt so that we can cool down the economy and cool down prices. They ask you to take on debt to save the system, and then they send you bankrupt when the inflation gets too high, and central banks use interest rates in order to do that. Isn't it a much better system if simply you just had one form of money? Forget M0, M1, M2, M3, M4, and banks creating it as debt and everyone. You just have one form of money called M. And it's completely transparent. If everyone knows what the money supply is, it's not hidden in complexity through the banking system, the shadow banking system, derivatives, investment banks, all sorts of craziness. You have one form of money, and you can tell whether a government's inflating or deflating transparently. And if they do, then you've got this competition. You can exit into Bitcoin. You can do what you want, but it's a lot more transparent. Monetary policy is going to be so much easier. The government doesn't need to borrow the money from the central bank. They have every authority to create their own money. Why do they borrow it from the central bank? They don't have to. They already do it with cash and coins. When they create cash and coins, they take a £10 or a $10 note. It costs the mint 3 cents to print it. They make $9.97. That's pure margin, is added to the Treasury's balance sheet, and it decreases the amount of tax that we need to pay because they've made money out of the note. They sell it to a bank. The bank gives them £10 of digital currency that they created as debt, and therefore that's added to that reduces the amount of tax that we need to pay. So there are positive and negative effects of this, but I personally believe in terms of fiat currencies, they don't need to be borrowed into existence. They can be created. It can be done in a lot more transparent way, and it's going to be a lot easier to control inflation and deflation, and couple that with an exit, so that if you don't like the way that the government's controlling those currencies or their policies, then you've got Bitcoin, and then you've got other countries in a globally competitive environment, which I think will be, interestingly, one of the most exciting times to be alive in financial history, but one of the biggest redistributions of wealth through countries, individuals, that everyone needs to speculate their way through.
So what time scale do you see this playing out over? Is this it's all happening this year, or is this over the next decade?
My personal perspective is I thought that the 2008 one was going to lead to radical monetary reform, but instead they used financial engineering and regulatory arbitrage in order to take those toxic assets. But the same regulatory arbitrage still exists. So you've got to look at it. So there was a 12-year cycle since 2008. We're now at the end of what I believe is an unsustainable debt cycle. I thought in 2008 it might be it, but we've proven that we can take this for another 12 years through financial engineering. The problem of 2008 was that retail banks were the mechanism for creating all the money in the economy. So they needed to find more and more people to take on mortgages. So what did they do? They went out to all of the mortgage brokers and say, you find us mortgages, and we'll give you a commission. All the mortgage brokers found it, and then the government said, we'll pay the deposit and we'll guarantee it so that you can have home ownership. So then mortgages got created on scale, en masse. I think I'm going to run out of battery, so I'm just going to plug this one in. I didn't realize I wasn't plugged in. They created mortgages en masse. Okay, we're not going to run out. And then what they did is they invented financial engineering products called collateralized debt obligations, mortgage-backed securities, and they packaged all those up. So the retail bank sold them through the investment bank to your pension. So you were pooling all your money together and contributing to the fund management industry. All the wealth managers, all the money managers, all the pension funds, all the insurance contributions, they were buying these products that were created by the retail banks, that were essentially, the bank removed the risk from that. And that was the financial crisis. when those products imploded, they realized that there was all that exposure at the banks and there was all the exposure to the pension system. It was far too disastrous. So they repackaged and used financial engineering. I believe that the cycle that we're in right now is, I believe you will get financial engineering at the central bank level this year, next year. That economy that we talked about with central bank digital currencies will be the solution to getting the economy back to some form of normality.
So you think we could see large financial institutions start to tumble relatively soon?
Well, there are other ways of doing it. That's just one scenario. The other scenario is that the banks have sold all the debt to your pension already. So remember what I said in 2008? They took all the liability using the retail bank, took all the liability, gave it to the investment bank. The investment bank created insurance products. They sliced them up. They created derivatives of those insurance products. They created derivatives of those products. And hedge funds, fund managers, the pension, they all own all that stuff. So depending on the level of exposure the retail bank has, that might become a pension crisis instead, in which case the bank still can continue business as usual, but they need to figure out a way of plugging in that gap.
Okay.
There are several holes in there that need to be filled. And the government through politics are going to decide which one goes, which one stays, which one gets bailed out. And the money that they're going to use to do that is a debt-free central bank digital currency.
It paints a picture of how incredible Bitcoin is, doesn't it? Because I hold it right now and it's just mine. All these conversations you're having about what changes may or may not happen based on politics, they don't play into this. And of course, governments can rally against Bitcoin. At the end of the day, it's censorship resistant and it's mine. And I think that's just going to become more powerful every year. Now, I know there's a lot of Moon Boys that want to hear a simple question or a simple answer from you. And that is, with your time in the market, do you feel now that we are in a bull trend? I'm not asking for a price, but do you think over the next 2-3 years, it's feasible that Bitcoin goes up in this environment?
So for me, I have a long-term theory, and there's two things that I've done over the last 10 years. I believe that every single financial product in the world is about to be disrupted by a fintech company. So I've been angel investing in all the companies in the industry. Some have failed. Some of them have gone on to become multi-billion-dollar unicorns. And there are some that are just not performing in the middle. I also took as an investment approach with Bitcoin, that I believe that Bitcoin is our world's best shot we ever have at achieving sound money in the modern economy that we live in today. So the approach that I follow is a long-term investment horizon of the next 10 to 20 years of what I think is going to happen. And I use investment principles like dollar cost averaging, compounded interest, compounded returns in order to develop a portfolio theory from what you've learned from what works in traditional markets and apply it to crypto. Have a percentage for mass speculation of things that might happen that are very high risk, and make sure that I don't lose all those things. So my investment thesis includes that I believe that the demand for money you can own, money you can spend, and money that has a fixed money supply is going to get bigger and bigger and bigger into the future. Will it crash? Will it go up? Well, I've seen my $30 Bitcoin crash to $3. I've seen my $1,250 Bitcoin crash to $250. I've seen my $20,000 Bitcoin crash to $3,000, and I expect my $100,000 Bitcoin to crash to $20,000, and I'll expect to see that many more times in the future. The people that overtrade are the people that are going to get wiped out. The people that have a long-term investment horizon based upon sound principles are the ones that are going to do well out of this concept. So I have always stayed away from price predictions of Bitcoin because it's a guaranteed failure. I will predict it 5 times. I might be right one time and everyone thinks I'm a hero, and I'll be wrong 4 times. What I believe is that I used to work as a market maker. 90% of traders lose. And I used to work in corporate finance, and I used to see the long-term investors and work with fund managers. Sound long-term investment principles win, traders lose. And that's just a fact. You might be the 0.01% of the 1% that knows how to beat the market, but you don't need to beat the market to get on the right side of these things. So I'm sorry, I'm coming to the end because I do have a meeting that I need to go to, but a few things I'd like to leave people with, if I may. On my YouTube channel, Simon Dixon, I give live commentary as this all unfolds. I'm often wrong. I'm willing to be wrong. And I'll give you updates as everything unfolds and give you live updates there. At Bank to the Future, the company that I founded, that's where high net worth investors can build a portfolio in crypto companies, fintech companies. Again, many of the companies that I mentioned, I do want to disclaim, I eat what I talk. So if you want to dismiss everything I say as self-interest, self-promotion, I'm completely okay with that, because I do eat what I talk, and I would benefit from these things happening. One thing that I'm really focused on right now, I wrote that book, Bank to the Future, in 2010. It's extremely relevant today, but I was a bit ignorant to the effects on privacy and freedom that it was have in then. And that was the one thing I think I got very wrong when I wrote that book. But the principles of what happened in the monetary system and fintech companies turned out to a lot of that to be accurate. So one of the things I want to do right now is deal with the fact that if I were starting from scratch today, what would I do? And I'm actually working on a set of videos and a course and all that stuff and a new book to actually address that question of, because many people think you had to have been there from the beginning. I actually think the tools are better today. And the people that I knew that were there from the beginning, some of them are multi-billionaires and some of them are broke, still in debt. And the reason is because there are actually lots of tools you can use today that make today a better time than it was before. So I'll leave you with those. It's a work in progress, a project I'm working with. And I will actually reach out to you guys as that comes through to see if we can work together on these.
That'd be fantastic. And we will put all of your links down below. So everybody, please go and check Simon out. You will not be disappointed.
Yeah,
thank you so much for today, mate. I've absolutely loved the conversation. I'm always blown away by the amount of OGs that are, like yourself, prepared to sit down and give me and Mike some time. So thank you very much, mate.
All right. Thank you for your time. Education is so important to keep doing what you're doing.
Brilliant.
All right, guys.
Hit the like and subscribe.
Bye-bye.
Peace, guys.